Hi, welcome back to Mom Wester channel. So last week, the China government actually announced a suspension on Ant Group IPO. As a result, Alibaba share actually plunged down at the opening market. So today I would like to share with you, if Ant Group IPO doesn't go through, what will happen to Alibaba share? First of all, I would like to make a disclaimer here. This is not a recommendation to buy or sell shares. This is purely a video to share my investment journey through this channel. So what happened to Baba stock? It actually dropped from last week $319 to $279, the lowest price this week. This is all because of uncertainties in the Ant Group's IPO. It has an impact on Baba shares because Alibaba actually holds 33% of stake in Ant Group. So why Ant Group got suspended? It is because the China government wants to suspend and impose a scrutiny on company because Ant is considered lucrative online lending business. So not only does Ant control a growing payments platform in Alipay, but it also does loans and wealth management business that actually climbed up to dominate their rivals. So the China's financial regulator actually plans and try to discourage the lenders from using Ant's platforms on this kind of loans and wealth management business. And also, there are too many retail investors actually pledge their assets to get a financing for themselves to invest in this once-in-a-lifetime opportunity IPO. It means that governments wants the retail investors' interest to be well protected. Well, that's actually my personal view. And China is demanding the company to have a boost to their capital, to fix their capital shortfall, and also to reapply for national licenses once they have boosted their capital before the sale can go ahead. Which I think it actually makes sense because at the end of the day, we want our capital to be well protected because of the size of this IPO is actually the biggest in the history. So let us go through what are the businesses in Ant Group. Ant Group is purely a fintech company which creates a payment platform and also simple high-frequency services marketplace. For example, you can use their platform to order movie tickets and order food. So, platform for financial services, it enables the user to do transactions with banks, with insurance company, and also asset management companies. There are many lenders are also using this platform to do the lending services, and this is also one of the concerns of the Chinese government, the financial regulator in China. That's why they also suspend the IPO of Ant Group. So what is next for Ant? Either they try again in the near future in Shanghai and in Hong Kong as planned before, or I hope there is a second good news where they actually try to IPO in US stock exchange. I hope that they actually try to do it in the US stock exchange, a second alternative. So we shall wait and see. Personally, I have allocated my portfolio into Alibaba stock. So, would I still continue to hold on to Alibaba stock? Do I still continue to hold Baba stocks? Definitely is a yes for me. I still strongly believe in Baba's business model as one of the major e-commerce players in the world, and the increase in the number of consumers year on year for Alibaba, this gives me confidence of their strong business model. I still believe that the e-commerce will continue to grow and replace the retail businesses for at least the next 10 to 20 years to come. And don't forget, they still have profit share in Ant Group. They are still a 33% shareholders of Ant Group, and this 33% shareholding in Ant Group will allow them to share their profit in Ant Group. So the downside is, for Alibaba, the investment in Ant Group that kept in Baba's balance sheet may have a downside of their fair value if they don't go for IPO within this year or the next year. Other than that, Alibaba is still a great company with healthy business results. So, this is Alibaba's revenue growth from 2010 to 2020, as you can see. There's such a tremendous growth. This is in million yuan, right? They are now in 322 billion yuan as of today in their revenue, right? And active consumers are actually growing since 2015. As you can see, they are consistently consumers growth, and these are all in millions. So they are currently have 742 million active consumers across Alibaba's platform in their e-commerce platform. For their financials, all these are in Chinese yuan in millions. Their total revenue actually growth from 2017 till today. Their actual revenue actually growth by 158 billion all the way right now is 548 billion. It has shown a consistent revenue growth, and also the GP margin is actually quite healthy, consistent for the past 3 years. Net margin is also very healthy. They are consistently profiting every year. And the interest expense, even though they have interest expenses, means that they have actually financing from the bank. So the interest coverage is very healthy. As long anything above 10, I would assume that I would make an assumption that the company can survive after paying off the interest. So above 10, everything here shows a consistently increase in the interest coverage. So it means that the company is actually financially very healthy. The EPS for Alibaba, it shows that the EPS is very good. Earnings per share keep growing every year. PE ratio, in fact, PE ratio for the past few years is above 40. Now it's actually dropped slightly, which I think is a good time to enter, especially for tech companies like this. Any PE ratio that is around 30, I would say is okay to invest. So actually now the PE ratio has dropped compared to previous years. So I think it's a good time to invest in Alibaba. So for their balance sheets, total assets keep growing over the years. Net assets keep growing as well. Cash and cash equivalents also keep growing from 150 billion to 386 billion this quarter. And for the cash flow statements, I always like to see positive operating cash flow. It means that company generating positive cash flow through their normal business operations. Investing cash flow is always good to see a negative cash flow. It means that they actually keep investing, keep sourcing for investment opportunities.
And financing cash flow positive, it is likely is because there is financing, either they issue share capital or either they take financing from the banks. So they don't have much capital stock purchase, they don't have much stock buyback. And for free cash flow, it actually shows that currently they have 150 billion free cash flow, which I think is very, very healthy.
So, to me, Alibaba is actually a long-term investment. If I were to enter into a position on a long-term investment, I would like to enter at the right time and also at the right price. So, is Alibaba a right time to buy now?
So, is Baba a good time to buy now? My slides was prepared on the 6th of November. This is the closing price of 6th of November. However, as of yesterday's closing, the price is actually at $289. So there's not much difference for Baba right now. So this technical chart is still applicable. So for me, I have already entered a position when it drops to 50 EMAs, because historically it shows that when the price drops to 50 EMAs, it will actually bounce back up. So that's where I entered my position here. I've already entered my position here. And what if Baba shares drop further to 100 EMAs, which is $270? If happens to Baba shares drop further to 100 or 200 EMAs, I will add my position at the 100 EMAs. And if it drops some more to 200 EMAs, I don't mind to add on some more position over here. Because fundamentally, Baba's business model is good, the company is good, this is a good business model, this is a strong company, and I believe in this company. I believe this company will continue to prosper in the next upcoming 10 years. That is the reason why I don't mind to hold investment in this particular company. Always remember, invest safely, and capital protection is very important.
I hope you enjoyed today's session and I hope to see you soon. Remember to invest safely. Cheers!